Hey traders, welcome back to this week's weekly Forex forecast. It was another winning week in the GMT real-time setups, but it was a difficult week. I have to be honest with you. It was very, very slow, and I ended up having to grind out a win really in the last couple of days of the week. In fact, really on the last day of the week. So it was a difficult week, but that was primarily because things weren't moving. We had the bank holiday. We also had later on in the week bank holidays in Australia and New Zealand. And because of that, the markets were just very, very slow. There was actually a real lack of opportunities last week. So coming into this week, we do have some things coming up in the economic calendar, and this is likely to kickstart markets once again. We have the Canadian elections coming up. Now, in today's video, I'm not really going to be looking at the CAD pairs anyway. They're not top of my list for next week. But just bear in mind, if you are trading the CAD pairs, we could see some volatility based on the outcome of that election on Monday. We also have coming up in the middle of the week, US GDP, which can move the markets because it's the advanced kind of pre-look at the actual GDP number. And we also have the BOJ on Thursday. So I am going to be looking at the JPY pairs in today's video, and I'll tell you exactly how I'm going to be looking at trading those around the BOJ rate decision next week. And finally, it is the first Friday of the month coming up next week. And what does that mean? It means we've got non-farm payrolls. So just bear that in mind. We also have non-farm payrolls on the Friday next week. So if we kick off by looking at euro dollar, you'll remember in the last couple of videos, I said to you that we were extremely overbought quantitatively in Hedge Dash on a rolling weekly basis. What does that mean? It means we're likely going to see a top in the euro dollar pair on roughly a 95% expectancy. Now, interestingly, it hasn't washed this out completely. This sentiment, or these bars, they turn gray. They kind of switch off once the sentiment has been washed out. It has lessened, but it hasn't washed out. So again, I don't think we're going to see any big up move breaking through prior highs next week, because we still need to wash out a little bit of that weekly sentiment. So it suggests next week, maybe the week after, we're still going to be chopping around or maybe correcting a bit in the euro dollar pair, but also the dollar pairs in general, and also the DXY, because the DXY is just the inverse really of euro dollar. So last week I did say to you, if we get a push up into the upper bound, you could look for that kind of range play. Alternatively, if you took out the lower bound, you could have also looked for that to the upside. And in the end, we took out the upper bound. Reactively, there was the opportunity if you were able to get hold of that. I personally didn't trade that last week, but there was a really nice opportunity. Kind of left that one on the table for a number of reasons. So coming into this week, you know, any kind of push back up, we're in that kind of exactly the same scenario as last weekend, whereby I would look at euro dollar reactively, because if we take out, and all the other pairs we look at in today's video will have a directional bias. So I'll either be short or do nothing, or I'll be long or do nothing. I won't be looking to be long or short. But in euro dollar, because of where we're at, you can kind of look at it to the long or short side reactively. So if we push back above the 1.15164, just like last week, because the sentiment still hasn't washed out, upside should be limited, and therefore you can look for that reversal back inside the range. Or if we pull back down and take out the lower bound, because the overall trend is to the upside, this also is a viable opportunity for 1 or 2 day reversal back inside the range, just as you saw last week. So going into this week, if you are trading euro dollar, I would, look at it from above the 1.1516 for potential short positions, and below the 1.12140 for potential long positions or bullish reversal patterns. So that's how I see euro dollar going into next week, but it's not one of my favorite markets to trade. But again, like last week, I do think we could get a good opportunity from either above or below the first weekly upper bound. So keep an eye out for that next week. Okay, so moving on to the portfolio selection, and you can see not much has changed from last week. In fact, we pretty much have exactly the same setup in terms of portfolio selection from last week. Why? Because nothing really happened last week. Nothing really moved. And so in terms of the assets that I'm going to be looking to be long or short this week, it's exactly the same as it was last week. And in fact, it's the same as it has been over the last few weeks. And throughout this month, these assets have performed fantastically well in terms of reversals from upper and lower bounds. It's been a fantastic month. So once again, I'm really looking at, not trying to fix something that isn't broken. I'm going to be focusing on Swiss franc long pairs. I'm also going to be looking at the euro to the long side as well. And I'm going to be looking once again at the Japanese yen to the long side. And primarily against all of those is the Aussie dollar. So Aussie franc short, Euro Aussie longs, I'm going to be looking at in today's video, and Aussie yen shorts once again. You can look at the US dollar, you know, versus the franc, versus the euro, versus the yen in terms of US dollar weakness. But again, if you look at euro dollar, that overextension to the upside on a weekly basis is essentially the inverse of the dollar. So it means that the US dollar is weak, but it still hasn't kind of washed out that weekly sentiment. If euro dollar is likely to push back a little bit and sell off a little bit more next week or chop around, it means dollar weakness is probably also limited. And this is why I've just been avoiding shorting the dollar over the last couple of weeks. And actually it hasn't gone anywhere in the last couple of weeks. We had a down week and now we've had an up week. So again, just like euro dollar, it's just kind of chopping around. So I am going to leave the dollar pairs for next week. I am going to be looking at pound shorts once again, and also New Zealand shorts. We're going to be looking at pound franc to the downside, euro pound to the upside, pound yen to the downside. I'm also going to be looking at New Zealand franc to the downside once again, euro New Zealand to the upside, and New Zealand yen to the downside next week. Okay, so kicking off the watch list with crude oil. Now, crude oil is still a short or do nothing for me. I cannot buy crude oil under any circumstances. So just zoomed out here on the 4-hour chart, just to reference once again, for those of you who've been following along, we've been looking at this pattern, you know, over the last few videos, this major breakout. And in fact, I highlighted this, you know, as we broke out and we were kind of in this area, that I didn't want to be long oil, because if we break this pattern, we could do so with momentum. And now we have a downside target of about 45. So I do think this market is going to continue probably for another $15 to the downside, which means every time it pops higher, I want to be looking for short opportunities. So going into this week, it's no different, and it sits right in the sell zone. So the sell zone for new viewers is between the weekly upper bound and the second weekly upper bound. Once we push into this area, this is where you tend to get reversals from. So that's where I begin to start to look for bearish reversal patterns in this case, you know, double top, head and shoulders, those kind of patterns which start to show buyers running out of steam, and then you get them pulling their positions, you get that liquidation, in this case to the downside. So I'm going to be looking primarily for the market to push through the 66.52. It's been quite choppy, hasn't really gone anywhere over the last week or so. But if we get a push into the sell zone and we hit the 67.81, so we go into the sell zone, I'm immediately looking to the left-hand side. I want to see where are primarily key areas of resistance, because these are places historically where price pushed into it from the underside to the upside and then rejected. And then after that, secondarily, I'll look for support, because historically, this is where price came down to, and then we had a bullish reaction. So if I'm looking to be short, yes, you know, you can test the underside, that's fine. But primarily, I would rather take a short from a prior resistance than a prior support, you know, and vice versa if you're long. So we don't actually have any over here. So, you know, the 67.81, this kind of bottom of the big descending triangle, is in and of itself essentially the prior, you know, support broken turning resistance. So we don't really have that kind of resistance level over here. In the 4-hour chart, you know, I'd like to see a high like this. That would be great. So if we push through and we test the 67.81, this is certainly where I'm going to begin to look. Do we see buyers kind of stalling out? And these are the setups that I'm looking at in real time, sending out to GMT members throughout the week. And if we get this and we test this kind of double top pattern, head and shoulders in this area, that's the kind of liquidation, just as we saw at the beginning of the video of euro dollar. Remember last week we pushed into the upper bound and then we got that liquidation back inside the range. That's exactly what I'll be looking for next week in crude oil. If we end up above the 69.88, this is kind of a plan B for me. Whether I'm short ready or not, you know, above here we become extremely overbought. So we've got the sell zone, and if we push all the way through this, once we start to push out the other side of the sell zone, the same with the buy zone, you know, vice versa. Once we start to push outside of it, we're extremely overbought. We're not just overbought during the week, we're extremely overbought. So it gives me the opportunity to add a second position if I want, or if I'm not already short, you know, a really good place to take an initial short from. So above the 69.88, this is the place where I can take a secondary short if I so wish. And the third and final thing, for those of you who use Fibonacci, you can look for the intra-week breakout setup. So essentially it pulls back. You get what's known as a fast market. So the market is so weak that it can't test its upper bound, and instead it breaks down in the direction of the prevailing trend. And then you get that kind of pullback. It hugs the moving average and you get that bear flag sell off into, in this case, the lower bound and the profit taking zone next week, 59.81. So those are the three setups, although the primary setup that I'm looking for is this. But those are the three things I'll be looking at as we go through the video and look at all of the other assets. Okay, so kicking off the Swiss franc pairs, starting with Aussie franc. I can either be short this market once again or do nothing. And look at this market. Every time it's pushed higher, sells off. Pushes higher, sells off. Pushes higher, sells off. Pushes higher, sells off. Pushes higher, sells off. Now, we didn't get big sell-offs, the last two. And, this kind of indicative of last week. We tested the upper bound in Aussie franc. We did get a reversal over here, but again, it was just not really much happened. And you can see this is because the momentum is to the downside. Overall, this is a market we should be looking, to be short or do nothing. So what I want to see once again next week is I want to see Aussie franc pushing into the sell zone, which is above the 0.53792. I look left, there's nothing here. Why? Because it's such a big drop that there's nothing but air between here. Okay, so what I really want to see is something similar to this, where price comes down, it forms its own high, and then it retests its own high because there's no resistance over here. So I'll be looking for that kind of double top setup in this area. Often that turns into a head and shoulders. I'm going to be looking for a 1 or 2 day liquidation back inside the range. So every market we're looking at, I'm attempting to capture, if we get a setup next week, 1 to 2 days worth of volatility. So in other words, out of 5 trading days in any one of these assets, I'm trying to capture 1 to 2 of those in a week. It becomes difficult to try and capture more than that, in any given asset. If you want to capture, 3, 4, 5 days worth of volatility, then you're probably going to have to pull 1 to 2 days out of one asset, 1 to 2 days out of another asset, 1 to 2 days out of another asset, etc. So that's the setup I'm going to be looking for next week. If we blast through it and take out the 0.5472, this is where we become extremely overbought during the week. So although this is the primary setup I'm looking at, above the 0.5379, I can take an additional position if we trade above the 0.5472. It's unlikely. Very rarely do we trade above these levels unless you have a catalyst, usually like an interest rate decision, CPI, or an unexpected catalyst like tariff announcements or the EU fiscal announcement, which was an unexpected catalyst. If there are no catalysts, expected or unexpected, then it's highly unlikely you're going to take these levels out at all. So again, you can just sidestep, markets with known catalysts like the JPY pairs. You can trade them into Thursday. And then on Thursday, if you want, you can just sidestep the BOJ and then you can come back afterwards. So you miss that kind of major volatility. So that's what I'm going to be looking for in Aussie franc. The third and final thing, if you get a fast market and it starts to push higher, and instead of taking out the upper bound, you get that momentum sell-off in the other direction. Look for the moving average to follow it, and you can get that bear flag set up down to the profit taking zone next week, which is the 0.5193. Next is pound franc. I can either be short or do nothing. I cannot buy this market next week. The upper bound sits at the 1.11509, so a trade above there puts us into the sell zone next week. Again, I look left. We do have a high here and really nothing else till up here again because of the volatility. So I would be looking, at this high over here. Can we push through this high? Can we test or wick the upper bound and then start to fail back through this high? Because all the people who are buying on the breakout of this key area resistance, if price pulls back and it consolidates and then it attempts to go and fails, all of those buyers on the breakout pull their positions and you get that liquidation. So that's the setup I'm going to be looking for in real time with GMT members next week. If we end up all the way above the 1.12857, this is the second place. I can look for a short opportunity if I so wish, even though I don't expect it to trade up to this level. If it does get there reactively, I can pull the trigger a second time or a first time if I'm not already short. And the third and final thing, as always, because I can only be short or do nothing, I can't buy this market. If you get a fast market and you get the reversal intra-week, and usually in the 4 hours you get one bear flag or bull flag opportunity in a week, but you can look for that bear flag sell-off into the 1.08811, which is the profit taking target to the downside next week in pound franc. And the final franc pair is New Zealand franc. Again, I can either be short or do nothing. I cannot buy this market next week. Again, we have nothing but air between the prior high and the bottom of the sell zone. So I would like to see this come up once again, very much like this. There's a high, it takes out the prior high and it double tops itself. So I'd like to see this come into the sell zone above the 0.50172. And I want to see buyers starting to run out of steam. And as I start to see that, as I start to see the momentum fading, that's when I'm pulling the trigger and I'm looking for that reversal back inside the range for 1 or 2 days. So going to be looking for that setup once again next week. If we trade above the 0.51026, it's not expected that we're going to do that. But if we do that, it is the second place I can pull the trigger on a short position if I so wish, looking for a double top head and shoulder reversal. And the third and final thing is, if we start to push up towards the upper bound, but again, you get the breakout intra-week, you can, if you so wish, because I know many people do like to trade, you know, Fibonacci and this kind of thing. That would be the kind of setup you could look for the 4-hour chart down to the 0.48462. Next, we have EurOsd. I can either be long EurOsd or do nothing. I cannot sell this market next week. What I want to see is I want to see this market pull back. Now, we do have in the buy zone here below the 1.75049, we do have a prior low right here and a prior high right here. You see how it kind of stair steps it? So this area right here would be a fantastic place to start to look. It's kind of halfway into the buy zone. This would be a great place if we come down, hit this, to start to look for bearish momentum to fade, looking for those double bottoms, inverse head and shoulders, bullish reversal patterns. I'm going to be looking for a 1 or 2 day liquidation back inside the range. If we end up below the 1.7245, it's not expected that this will happen, but if we do end up down below here, this is the second place I can pull the trigger on a long position if I so wish, or a second position, because it's where we become extremely oversold during the week. And the final thing is you can look for that fast market where we get close to the lower bound, or even if we just push down a little bit and then you get the re-break, and it basically just becomes a channel breakout. The moving average follows it, and you can look for that pullback, and the bull flag set up into, there's a prior high right here as well, but the upper bound at the 1.80245. Next is Euro Pound. I can either be long or do nothing. I cannot sell this market next week. So I want to see this market pushing into the buy zone, which is below the 0.84622. And because there's nothing but air between these levels here, you can see that I would start to look for a double bottom, inverse head and shoulders in and of itself. You know, yes, we're looking on the 4-hour chart, but zooming down, dropping down to the 1 hour, the 15 minute, the 5 minute, maybe even the 1 minute, just to refine the entry. But looking for that double bottom reversal, or those bullish reversal patterns in this area. If we end up down below the 0.83890, that is a significant area to watch, because this is where we would become extremely oversold during the week. In other words, the odds of a reversal for 1 or 2 days greatly increase if you become extremely oversold as opposed to just oversold during the week. So I can take a second position from there if I so wish, or an initial position if I'm not already long. And the third and final thing you can look for, again, that kind of channel break. We've got this A, B, and a C. So it would almost be a C wave breakout, you know, this kind of channel like this. But because channels kind of change, you know, you can use the moving average as a kind of dynamic trend line. And so you get a breakout, the moving average follows it, and then you get that kind of bull flag set up, in this case, into the profit taking zone, the 0.86084. And the final euro pair is Euro New Zealand. So I can either be long once again or do nothing, cannot sell this market next week. So what I want to see is I want to see this market come down, enter the buy zone. And look at this. This is where we have confluence. This is what I really like to see. We've got a prior support here. Price hit this level and started to rally. We have another key area of support down here. And in fact, looks like they're both trying to take out this initial primary low over here. So if we enter this area, we start to test these levels. This is where I'm going to be looking almost certainly next week. If we can get sellers starting to run out of steam, attempting to break below these levels, maybe we go through there and we kind of stall out of this level. And I'm going to be looking for them to pull their positions. I'm looking for that liquidation back inside the range for 1 or 2 days worth of return. If we end up down below the 1.85095, I don't expect it to do this. This is unlikely, very unlikely. But in the off chance that it does, we become extremely oversold. And so this would be the second place I could look for a long position. And the third and final thing, as always, you know, we've got kind of lower highs, lower lows. If we start to stall out before we get to this level, and then you get that momentum break back above the moving average, because it's a bullish or do nothing asset, you can look for that 4-hour bull flag into the upper bound, profit taking target 1.93349. And wrapping up the Forex universe with the yen pairs before we move on to gold and silver, just bear in mind we have the BOJ on Thursday. So because it's later on in the week, ideally I would like to get involved in these markets before the BOJ if the setups appear, and be out of them before the BOJ. Because leading into an interest rate decision, you tend to not see large amounts of money coming into these pairs. And so what happens is, if you do get a test of the upper and lower bound before Thursday, let's say you get it on Monday or Tuesday, the chances of it holding the range are very high, because most big money players are not going to put money in before the BOJ, or they've been doing it, you know, in prior weeks. You usually see them on you usually see the money coming in on the interest rate decision. That's why you see an interest rate decision or you see the event, and then you get the volatility, right? And often they're actually using that, as liquidity to even exit positions. But it means that leading up to interest rate decisions or big news events, especially interest rate decisions, these markets tend to be choppy and they hold their range as well. So I'd like to see the market pushing above the 93.61. This is the area, looking left, there's nothing until the prior high. So I'd like to see this start to form a double top, head and shoulders, and I'd be looking for a 1 or 2 day reversal back inside the range before Thursday. If we end up above the 95.33, which is viable next week in the yen pairs because we've got the BOJ. So it's highly unlikely this will happen before Thursday, but on Thursday, if we get a dovish or a bearish outcome from the JPY reactively and you're just waiting, you're sitting on the sidelines because it's Thursday, you see this pair blast up to its second upper bound, this would be the second place. If I wasn't already short, it would be the first, initial position, but after the BOJ, you could look for a 1 or 2 day reversal. So again, if you've got that kind of interest rate decision, you've got a catalyst, you have to be nuanced about it because you have to ask yourself, is it worth stepping in front of this? Usually at the second upper or lower bound, markets don't tend to go past that even with interest rate decisions. You need some serious catalyst in order to get past second upper and lower weekly bounds. A good example being that massive EU fiscal catalyst that came out. Otherwise, you very rarely see these markets go to third upper bounds or third lower bounds. So even on interest rate decision above the 95.33, I would be interested. And the third and final thing is, if nothing really happens in this market and it just kind of chops around, you can get the BOJ on Thursday. Maybe they come out hawkish, say they're going to raise rates sooner than expected. And you see the Aussie yen tank. That actually sets up that follow through post interest rate decision. Very often gives you the sell-off, the momentum sell-off. You get the correction or consolidation, and that gives you a bear flag or bull flag, but in this case, bear flag setup down to the 90.16. Not really worth trading these pairs before the BOJ intra-week or between the ranges because you're liable to be chopped about in those markets. Next is pound yen. Again, I can either be short or do nothing, and primarily I want to be in and out of this before Thursday. So if we get the push into the 194.13, this is where we become overbought during the week. This is where I'm going to begin to look. Again, there's nothing until here, and it's past the halfway point of the range. So often I'm looking for, in this case, key areas of resistance kind of in the first half. Because once you start to break past the halfway point, yes, we can turn in these areas, but, very often you can start to make your way up. So I would be looking for the double top head and shoulders reversal, and especially if we get this triggering on kind of Monday or Tuesday, that would usually is a very, very good setup because of the interest rate decision later on in the week. So that's what I'm going to be looking for next week in pound yen primarily. If we end up above the 196.96, it means we've become extremely overbought during the week. It is the second place I can pull the trigger on a short, whether I'm short already or not. And it is also potentially viable next week purely because we have the catalyst in the economic calendar. So you can get that volatility that takes, these markets, these yen pairs to their second upper or lower bounds. And of course, it would do that, it would be a significant yen depreciation, and therefore it would have to be a very negative outcome. Let's say an unexpected interest rate cut, right? I'm not saying that's going to happen. I'm just giving you a hypothetical example of what a catalyst that could see this going into a second upper bound next week. And the third and final thing is, especially if, not worth really taking this before the BOJ, but if on the BOJ nothing has happened and you get that initial sell-off because you get a bullish catalyst for the yen, usually you get that one pullback into the moving average, move away, bear flag in this case, down to the profit taking target at the 188.46. And finally, we have New Zealand yen before we move on to gold and silver. Of course, I can either be short or do nothing. And again, I'd like to get these setups early on in the week so I can be in and out and done in the yen pairs by the time the BOJ rolls around on Thursday. So you can see in this case, we have a really nice high right here. That's great because if we push into this area, this is where I'd be looking for buyers to start to stall out. Put yourself in the shoes of buyers leading into the BOJ. There are traders, let's say, who buy this. It ends up taking out this resistance area like this, into Tuesday. If you're sitting on profits into Tuesday, maybe into Wednesday, and the BOJ are coming up on Thursday, what are you going to do? A lot of traders are going to exit their positions. They're going to book those profits because they're going to be thinking, I'm sitting here on profits. The BOJ is coming up in a day or two. And if it goes against me, not only are these profits going to evaporate, but I could end up seeing, this profitable move turning into a loss. So they book their positions, they pull their positions, and then that actually causes a liquidation in the opposite direction ahead of the BOJ, and that's where you can actually book profits, for 1 or 2 days to the downside before the BOJ. So I will be looking for that setup next week. If we end up above the 88.85, we're extremely overbought during the week. Something significant has happened during the BOJ, most likely. It is the second place I can look for a 1 or 2 day reversal. And the third and final thing is if you get the sell-off on the BOJ, and I wouldn't look for this before the BOJ, but if you get it on the BOJ, you can look for the pullback post BOJ and look for that bear flag setup into the lower bound profit taking target to the downside at the 84.04. Okay, so wrapping up the video with gold and silver, and because of where the dollar is, in other words, it's weak, therefore, bullish setups are attractive in gold and silver, but it's also so oversold that downside is probably limited, meaning it could snap back. It kind of means the dollar could go either way next week. So what that means is reactively, I would actually rather trade gold and silver in different directions given the chance. In other words, if we push down to the lower bound, because gold and silver, tend to more or less move together, I would prefer to buy gold from the lower bound. And if we push into upper bounds, I would prefer to sell silver in that scenario. So going into next week, I will be looking for gold to come down, take out the 3224.73. This is where we enter the buy zone in gold next week. And we do have a prior low right here. So this is quite nice because we come down, we test this. I'm going to be looking right here to see if sellers start to run out of steam. I'm going to be looking for bullish reversal patterns for a 1 or 2 day move back inside the range. If we end up below the 3131.27, it's the second place I can pull the trigger on a long position, but it's unlikely we end up down here. You'd need to see a big sell-off in gold and probably a massive rally in the dollar. So you probably need some kind of catalyst for that. So not expected to take this level out, but if we do get there, I can pull the trigger a second time on a long position. And the third and final thing, if you get that intra-week breakout, you see this kind of channel into the downside. So you come down towards the lower bound, maybe we close the gap, we don't take out the lower bound, and then you get the rally to the upside. You can look for the moving average to follow. Pullback, bull flag setup into the profit taking zone, which is above the 3411.66. And last but not least, we have silver. So only really looking for short opportunities in silver. I don't really want to buy this. What I want to see is silver to come up, take out the upper bound, so we enter the sell zone, which is above the 34.33. Really nice prior highs over here, and this means what I'll be looking for is this. Price to come up, test the prior high, and I want to see if buyers start to fail. Because what happens is that this prior resistance, especially entering the sell zone, so we've got that kind of confluence of opportunity, buyers start to struggle in this area. Then when they pull their positions, in other words, people who are long book their profits, so people who have bought sell, this is what causes that liquidation back inside the range if they fail to break out from this high. So that's the 1 or 2 day reversal I'll be looking at if we do trade into the sell zone above the 34.33 next week. If we enter the other side of the sell zone, that means we go all the way through it. This is where we become extremely overbought during the week. But the issue is, why have we done that? Have we got a big catalyst, maybe a bearish catalyst in the dollar, which has catapulted silver up? At that point, unless I'm already short, I probably would leave this, and I don't expect to take out this level anyway, but above the 35.60 is where I can pull the trigger on a second short position if I so wish. And the third and final thing is we start to make our way up, and if we do get a snapback in the dollar and you see a strong sell-off in silver, you can look for the pullback into the moving average and that bear flag set up down to the lower bound at 31.79. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.